Hi, I'm Lindsay Bell with Global Markets Intelligence at S&P Capital IQ. I'll be covering the market outlook for the U.S. and Europe. Now the third quarter earnings season has ended, the focus switches to the fourth quarter and 2015. As we finish up the last few weeks of the quarter, the S&P 500 earnings per share estimate stands at $29.92, representing growth of 5.5% over last year's fourth quarter. From a sector perspective, healthcare, telecommunications, industrials, and information technology are expected to lead growth in the quarter. Materials and energy, which produced some of the best growth rates in the last quarter, are expected to be the two worst performing sectors in the index this quarter. Energy earnings estimates have been slashed in the last few months as a result of tumbling oil prices, which now stand at a 5-year low. In fact, energy sector earnings are 27% lower since June 30th. With the exploration and production companies bearing the brunt of the cuts. If you exclude the energy earnings, fourth quarter S&P 500 EPS growth is expected to be 8.1%, better than the 5.5% growth including energy. The materials sector has also been a drag on earnings for the fourth quarter, despite having the best growth of all 10 S&P 500 sectors in the third quarter. Commodities like gold, silver, aluminum, and copper have followed oil's downward spiral, negatively impacting the sector. Alcoa's earnings release on January 12th will be one to watch for a good read into this group's outlook. Although energy, and to a lesser extent materials, are helping to lower the overall earnings hurdle, that doesn't really jive with the economic environment. GMI still remains optimistic as we enter 2015, with jobs on the rise, consumer sentiment at its highest level since 2007, solid retail sales, the ISM Manufacturing Business Service survey well in expansionary territory, and GDP growth accelerating. We expect S&P 500 earnings will grow by close to or above double-digit rates in the coming year, making the recent reassessment of future earnings expectations seem like a potential overreaction to the falling crude oil prices. In Europe, the S&P Euro 350 remains volatile. Monetary policy action remains on hold until next year, and most investors are expecting the ECB to announce a broad-based asset purchase program, though the group's largest economy, Germany, remains firmly against it. The earnings growth outlook for the region has been reined in a bit and now stands at 8.4% for 2014. Technology and financials continue to lead growth this year, while telecommunications, utilities, and consumer staples lag. Until next time, I'm Lindsay Bell with S&P Capital IQ.